The third one, resist fear of missing out. If the only reason you are investing in something is to avoid missing out, the only thing you won't miss out on is losing everything. Fear of missing out. FOMO is a sure way to destroy whatever wealth you may have accumulated over the years. The problem is that a gut reaction to something that should be researched first. Trading based on your gut will quickly lead to an upset stomach. Know what you are buying, really know it. Going on a trading app and seeing currencies up 30% or so over the past 24 hours isn't research. It could be your unlucky step. Being sold a falling cryptocurrency, every coin has pumpers, shameless promoters, even Bitcoin don't succumb to peer pressure. This isn't higher school. Think for yourself and evaluate the case for an investment on the merit. Research, then research again. Okay, fourthly, if it sounds too good to be true, it probably is much like Wall Street. The US Congress or the American Bar Association. Crypto is rife with charlatans. There are more than enough people promising their project will be the one to overtake Bitcoin. But is it? There's only one way to find out. Research, buyer beware, but also borrowers beware. Some crypto exchanges offer more than 100 times leverage, meaning you can borrow up to 99% of the cost of an investment. This will just your profit if a coin goes up in value. But if it goes the other way, you could quickly be wiped out. Okay? The fifth point, don't trust, verify scammers. Abound in this market. Just this past weekend, some rascals on Twitter took advantage of Elon Musk's appearance on television Saturday Night Live to defraud people out of $100,000 worth of various crypto with a bogus giveaway impersonating the comedy show's Twitter account. The miscreants instructed their victims to send small amounts of crypto to verify their addresses. If they did so, they would get 10 times the amount back. That's too good to be true. Proposition was a red flag. Read this and this for more tales signs. Okay? The sixth point, be aware of unit bias. Just because a coin is trading around $1 doesn't means it's cheaper than Bitcoin at $58,000. Not all coins are created equal. There are literally thousands of cryptocurrencies, some of which seek to emulate Bitcoin and some of which try to solve other issues. They all have varying levels of developers support and decentralization. Determining the value of a coin means asking how and why was the coin created. What is is a supposed utility, who is working on it, how big is the developer community, how active is the repository on GitHub, where updates to open source software are usually logged, like building a code base requires meetings, and neglect can leave a structure unsound. Crucially, what's the coin's security model? Proof of work, proof of stake, or something else? If it's the former, how does the hash rate compare to other proof of work coins? If you don't know what these terms mean, you are not ready to invest. Okay, the 7 point, not your keys, not your coins. Cryptocurrency is the bearer asset like cash or jewelry, meaning the holder is presumed to be the rightful owner. Once it's lost or stolen, it's gone. That's why advanced users will advise you not to entrust the cryptographic keys to a digital currency wallet to a third party such as an exchange, because these firms are largely unregulated in many places and may be subject to hacks or exit scams. Okay, such as decentralized financial DeFi platforms have fallen prey to numerous high-profit exploits over the past 10 months, and centralized platforms like Binance have been subject to their fair shares as well. However, safeguarding keys yourself on a hardware device or even a piece of paper with a string of numerous and letter written on it can be a nerve-wracking business, and it's easy to mess up. This is why even some experienced investors prefer to use third-party custodians. Crypto is all about trade-offs. Do you trust yourself not to lose that piece of paper or forget the seed phrase, a passphrase for a key that unlocks your crypto? If not, you have to be comfortable with someone else storing your digital valuables, and history gives you every reason not to mitigate the risks. There is something called a multi-signature wallet. This can be configured so that, for example, both Bob and Alice must sign off a transaction to release funds from a wallet, or either Bob or Alice can do so, or three of Bob and Carol and Ted and Alice, and so on. But yes, it's complicated. Aside from the exploits, exchanges may block you from withdrawing your funds at any time for a variety of reasons, ranging from solving issues to legal troubles. Even beyond that, some exchanges just don't have their infrastructure necessary to remain up at all times. Coinbase and Robinhood, for example, often go down during peer. Okay, the 8th point, you can buy a fraction of Bitcoin and most other cryptos. You don't need to buy a whole coin. Okay, Bitcoin, for example, is divisible to the 8th decimal So if you are curious about how this stuff works, you can purchase as little as $10 worth and just play around with it. As billionaire Mark Cuban recently said on television, of buying a small amount of dogging coin is a whole lot better than a lottery ticket. Unfortunately, he also encouraged viewers to spend dogs on merchandise without mentioning the tax implication. Okay, the next point. Understand the tax consequence. This is especially important in the US for several reasons. First, the Internal Revenue Service (IRS) considers crypto property, not currency, for tax purchases. The upshot is if you buy a coin for $1 and it doubles in value, and you spend that extra dollar to buy so much as a pack of chewing gum, you are required to report that capital gain and pay tax on it. There is no de minimis exemption that despite the crypto industry lobbying effort. Also, centralized exchanges regularly send account information to the IRS. Sure, crypto isn't as regulated as stocks or banks. However, the federal government is running a massive deficit, and it won't think twice about sending in folks with mirrored aviators glasses to visit you to ask about your crypto trades. Okay, the last point, the 10th one, by using dollars cost averaging and don't obsess about price. Go outside, get some fresh air, exercise and sunshine. Spend time with your family. You can do all that and invest in crypto. The markets will fluctuate from day to day, hour to hour, minute to minute. But any crypto worth a damn. Any investment of any kind worth a damn is a long-term bet. So if you want to dopamine hit, go for a run or watch an action movie. What's the best way to invest and not unbiased? Is using dollars cost averaging DCA. Buy a set dollars amount of whatever crypto you like at regularly intervals, daily, weekly, monthly, annually. You pick, and don't look at it. If you have a long-term view, you are not going to be pressed to sell or up your possession based on short-term movements. If you use DCA, the purpose of this article is not to scare anyone away from a fascinating and potentially transformational field, but to make sure they come in with their eyes wide open. As a sergeant on an old cop show would say, let's be careful out there. Okay? If you want to invest the cryptocurrency and step into this field, just using the link below to register all kinds of exchanges. Okay, I'm Frank. Bye. Next time.